Welcome back to Investing Talk Podcast. Today, we're tackling a question quite a few of you have actually sent in. Is Wolfspeed a good time to buy now? We've pulled together a pretty comprehensive stack of sources, everything from detailed financials to market sentiment and some really key updates on their restructuring. We're going to try and unpack this whole complex situation. Before we jump in, though, if you find these discussions helpful, please do remember to subscribe, maybe leave a comment below. We really love hearing from you, and honestly, it helps us figure out which companies you'd like us to look into next. So, Wolfspeed. Definitely an intriguing company, right? They're deep into silicon carbide technology. That's
Right.
the key stuff for electric vehicles, renewable energy.
Absolutely critical tech.
You'd think it's a slam dunk. But their financial performance lately, it's been a bit of a bumpy ride, to put it mildly.
Yeah, that's an understatement.
Our sources show this real split. One perspective is pretty bearish, lots of red flags. But then another highlights these huge restructuring efforts, things that could signal maybe a genuine turnaround. It's quite the contrast.
It really is. And it perfectly illustrates why you have to look at the whole picture, especially with a company in such a potentially transformative space. We'll definitely be digging into both sides, these serious financial headwinds they faced and also these, ambitious strategic moves they're making to try and reset things.
Okay, let's start with those financials then. Let's unpack the recent numbers because they paint a pretty stark picture. Looking at their fiscal year 2025 results, yeah, it's not pretty. Revenue actually decreased 8.7% year over year, down to $885.3 million.
And the drop, it wasn't just, a small blip. It was mainly lower demand and customers cutting back on inventory, signal some broader issues.
Exactly. But the thing that really jumps out, I think, is the gross margin.
Oh, absolutely. It just cratered. It went from 17.4% in fiscal 24 down to only 2.7% in fiscal 25.
2.7%.
Yeah. I mean, that's a massive plunge. And it wasn't just one thing. It was like a combination of higher production costs, not fully using their new factory capacity.
The underutilization costs,
Right,
right?
exactly. Huge costs there. Plus significant charges from asset impairments. It just shows how quickly things can unravel operationally when you're scaling up like this.
And that flows right down to the bottom line. The losses just widened considerably. Operating loss was, $371.1 million, up massively from $98.6 million the year before.
And the net loss followed, hitting
Right.
$362.8 million compared to $147.6 million.
So per share, that's $2.92 diluted EPS for fiscal 25, way worse than the $1.24 in 24. They were definitely bleeding cash.
They absolutely were. And connecting that to the bigger picture, the free cash flow was negative $511.1 million,
Wow.
burning through $500 million, mostly because they're still spending heavily on expanding manufacturing, like that Mohawk Valley fab,
Right, the big investment.
while still having negative cash flow from operations. It raises serious questions about their immediate cash situation. And then there's the debt. Total debt stands at $2.246 billion. That gives them a debt-to-equity ratio of 2.09.
Oof, more than double the debt compared to equity.
Precisely. That highlights how much they rely on outside funding just to keep the lights on, basically.
Yet, despite all these, frankly, alarming numbers, management's public stance has been, surprisingly optimistic. They forecast near-term headwinds, sure, but they keep pointing to long-term growth from silicon carbide adoption in EVs and renewables.
Yeah, they even put out a statement saying they believe their current cash and operations are enough for the next 12 months.
Which feels bold given those figures we just discussed. Okay, so moving beyond those raw financials, which are clearly tough, let's widen the lens a bit. What about their actual position in the market, competitively speaking, and what are the technical signals telling us?
Right. Well, Wolfspeed has carved out a really interesting spot. They're a leading pure-play provider of silicon carbide, the substrates, wafers, power devices, all critical stuff for next-gen EVs and renewables. And they do have real advantages. They're vertically integrated, which helps control the process. They have a huge patent portfolio, over 1,600 patents.
That's significant.
It is. And they have relationships with big names in automotive and energy, so they're definitely a pioneer. But, and this is a big but, their gross margins and their overall scale, they still lag behind the big guys like on semiconductor or Infineon.
Right, who are much more diversified.
Exactly. Broader product lines, deeper pockets. So Wolfspeed has to fight harder for profitability and market share against some really formidable competitors.
Okay, so what about the stock itself? Switching to the technicals, the stock's been bouncing around recently between $5.40 and $2.10, and we should mention this is after a reverse split.
Yeah, that's key context, often done when a stock price falls a lot, trying to boost that per share value.
Right, and that might explain some of the higher volatility we're seeing, plus it's trading way below its declining 200-day moving average.
Classic sign of a long-term downtrend, no doubt about it.
And what about other indicators?
Well, the RSI, the Relative Strength Index, is around 34. So it's getting close to oversold territory,
Okay.
which is usually below 30, but it's not quite there yet. Not an extreme low signaling immediate bounce.
Okay.
And the MAPD indicator, deeply negative, still no crossover signal. That points to just persistent selling pressure, bearish momentum.
So no technical relief in sight just yet.
Doesn't look like it. And you add in the high option volatility, the big daily swings.
Yeah.
It's all reflecting a lot of uncertainty and risk. The technical picture is pretty rough.
Okay, so we've got tough financials, a stock under pressure.
Yeah.
What specifically triggered the most recent really sharp downturn? What drove that immediate pressure? Well, back in August 2025, their Q4 results came in, and their revenue missed expectations significantly.
Right, that was a big miss.
And maybe even more damaging, management pulled their medium-term margin guidance. That guidance had been sort of a key part of their story.
Yeah, withdrawing guidance like that really spooks the market.
It certainly did. The stock dropped over 25% right after the report. Ouch.
Yeah. And then the Wall Street downgrade started rolling in during September. Morgan Stanley slapped a sell rating on it. JP Morgan lowered their target price.
When the big gangs turn negative like that, it sends a strong signal.
Definitely. And the overall analyst consensus now reflects that negativity. The median 12-month price target is down around $1.80. Most ratings are underperform or sell.
So the professionals aren't seeing a quick fix. What about insiders, the people running the company?
That's another worrying sign. If you look at the Form 4 filings, those public reports of insider trades, there were way more insider sales than buys in 2025. And importantly, those sales were clustered right after those disappointing earnings reports, including sales by the CEO and the CFO.
Not exactly a vote of confidence when the top execs are selling after bad news.
No, it isn't. It tends to shake investor confidence quite a bit.
And then you look beyond the institutions and insiders, social media, financial forums. Sentiment there seems heavily negative.
Yeah, lots of negative chatter. Plus, short interest has been rising, and reports suggest larger retail investors have been heading for the exits.
So the market reaction has been pretty clear, pretty strong. It really felt like Wolfspeed was maybe stuck in a downward spiral.
It certainly looks that way, but, and this is where the story takes a really dramatic turn, while all that fundamental and technical negativity was happening, behind the scenes, Wolfspeed was making some massive changes, basically hitting the reset button financially and operationally.
A complete overhaul attempt.
Pretty much.
Yeah.
And the big question now is, can these incredibly ambitious moves actually lead to a sustainable turnaround? Or is it, too little too late?
Let's talk about those moves. It started dramatically, didn't it? With Chapter 11.
Right.
Yes. In July 2025, Wolfspeed filed for Chapter 11 bankruptcy protection. Now, for listeners, that's not liquidation usually. It's a legal process to reorganize debt while you keep operating.
Exactly. The goal was incredibly ambitious. Cut total debt by around 70% and slash those annual account interest payments. It was a survival move, essentially, a way to wipe the slate partially clean.
Did it have immediate impacts elsewhere?
Oh, yeah. You saw Renesas Electronics, one of their partners, take a big loss related to money Wolfspeed owed them. Shows the ripple effects of that kind of distress.
Right.
But crucially, Wolfspeed made progress within the Chapter 11 process. By August, they got backing from 97% of their senior secured note holders and the major convertible debt holders.
That's huge support from the people they owed money to.
It is. And it was critical. It allowed them to keep the business running, keep supplying customers during this whole reorganization, prevented a total collapse.
And alongside the financial restructuring, there were big changes in leadership, right? Yes, bringing in new blood, new expertise. Brett Zahn came in as VP and GM for automotive in August, key focus on that EV roadmap.
Critical area.
Meanwhile, that big Mohawk Valley fab, despite those heavy underutilization costs over $105 million, they kept ramping up production, signaling they're still betting on future capacity.
Sticking to the plan, despite the pain.
Right. Then in September, Gregor Venison was appointed CFO. His background, transformational financing, tells you exactly what the priority was.
Laser focus on the finances.
And Dr. David Emerson joined as COO, tasked specifically with operational excellence, especially as they shift towards more efficient 200-millimeter wafer production.
So strategic hires targeting their main weak spots.
Yeah.
Finance and operation.
Exactly. And then the big moment came.
The court approval. On September 9th, the court approved Wolfspeed's plan of reorganization. That was the green light. It cleared the path for them to officially emerge from Chapter 11 financially leaner without that crushing debt load.
And the market reaction to that news.
Absolutely explosive. The share price surged something like 60% in extended trading after that announcement.
Wow, 60%.
Yeah. It showed that the market was suddenly willing to believe again, or at least entertain the possibility of a turnaround, now that the bankruptcy process was resolving and the debt burden was lighter.
Okay, so a real potential turning point. Given all these dramatic shifts, the Chapter 11, the new leadership, the court approval, what should you, the listener, be watching for now? Both near term and long term, what are the catalysts and the risks? Near term, the next big thing is definitely the Q1 fiscal 2026 earnings release. That's expected in November 2025. Everyone will be watching for signs that demand is stabilizing or, crucially, if they're making progress using more of that Mohawk Valley fab capacity. Getting those utilization rates up is key.
Absolutely critical.
Also, keep an eye on things like ETF rebalancing. There's one coming up October 1st, and institutional ownership filings in November. Those can sometimes cause short-term swings in the stock price.
Good point. Longer term, the catalysts are really tied to the industry itself. Silicon carbide adoption in EVs and renewables is still accelerating. That's the big wave Wolfspeed hopes to ride.
If they can survive to ride it.
If they can survive, exactly. Renewed revenue growth, margin expansion. It's possible if that adoption curve really takes off. Plus, there are always those background rumors, strategic buyers potentially sniffing around for a takeover. That could pop the stock.
M&A speculation, right?
And watch for announcements of new contracts, especially with big Tier 1 automakers. That would be huge validation.
And maybe even government support, things like subsidies for domestic chip manufacturing.
Could be. That's always a possibility in this sector. Could provide a nice financial cushion.
But, okay, let's temper the optimism. This turnaround is absolutely not a sure thing. What are the major risks still looming? Well, stock-specific risks are still very real. Liquidity, cash burn. They're still likely burning cash, still reliant on potentially more financing down the road. That's a worry.
Negative free cash flow is hard to sustain.
And customer concentration is another one. Their top 3 customers made up over 40% of revenue in fiscal 25. Losing even one of those could hurt badly.
Big dependency there.
And then there's just plain execution risk. Getting that Mohawk Valley fab running smoothly and efficiently. That's a massive operational challenge. Complex manufacturing ramp-ups often hit snags.
For sure. And beyond the company itself, you've got broader market and sector risks. Semiconductor cycles can turn down sharply. Competition is fierce. Those bigger players like onsemi and Infineon are also pouring money into silicon carbide.
They aren't standing still.
Not at all. And then macroeconomic factors, rising interest rates, making borrowing harder, or maybe shifts in EV demand globally. Any of those could slow down Wolfspeed's recovery. It could be a long, bumpy road back.
So wrapping this all up, what does it mean for you listening right now, considering Wolfspeed? We've really laid out this clear tension, haven't we, between a, frankly, scary financial and technical picture on one side.
Yeah, really challenging numbers.
And this determined, almost drastic effort at restructuring and operational change on the other. It's a real tug-of-war.
It is. On that challenging side, you've got the declining revenue, the widening losses, that massive margin collapse, the negative free cash flow, just draining cash.
It's a stressed balance sheet, high debt.
Right. And technically, the stock is still in that downtrend, still showing bearish momentum. One of our sources, as you mentioned, gave it like a 3 out of 10 for long-term investment right now, basically saying maybe it's more for traders playing volatility than a long-term hold until things really stabilize.
Okay, that's the bear case, pretty clear.
Yeah.
But then, the other side of the coin, this dramatic restructuring. The Chapter 11 filing specifically aimed at cutting that debt by 70%. The fact that creditors strongly supported that plan.
That support is key.
The new leadership brought in for finance, operations, automotive, and critically, the court signing off on the reorganization plan.
Yeah, setting a new foundation.
And let's not forget, Wolfspeed is still a leader in a market silicon carbide that is fundamental to the future of EVs and renewables. That long-term trend is powerful.
Absolutely. So the key takeaway, I think, is that Wolfspeed's future, especially in the near term, it all comes down to execution.
Mm.
Can they successfully implement this post-restructuring strategy? Investors, you really need to watch for concrete signs.
Mm.
Is the debt actually coming down on the balance sheet? Are they hitting profitability milestones? Are they landing new automotive deals?
Tangible progress.
Exactly. It's a classic high-risk, potentially high-reward situation.
Mm.
The recovery is absolutely not guaranteed, but maybe, just maybe, the groundwork for that turnaround has been laid. Now it's all about making it happen.
Clearly, Wolfspeed presents just a profoundly complex picture for investors right now. You're balancing these significant financial hurdles against really ambitious restructuring in a market that's undeniably critical and growing.
Which really brings us to a final important question for you to think about. Given Wolfspeed's potentially vital role in next-generation tech, like EVs and renewables, how much weight should you place on those powerful long-term industry tailwinds versus the very real, very immediate financial distress and the significant execution risks the company still faces?
That's the million-dollar question, isn't it? Well, thank you for joining us for this exploration. We hope it's giving you a clearer, maybe more nuanced perspective on Wolfspeed. And please remember to subscribe, like, and definitely leave us a comment below. Let us know if there are other companies you'd like us to investigate next. It really does help us decide what to cover. Thanks for listening.